Hey, future chartered accountants, you're welcome back to my YouTube channel. Thank you so much for always stopping by. If you are new here, kindly hit the subscribe button. Hit it. And to my returning subscribers, thank you so much. I've seen the reviews, I've gotten DMs, comments on videos. I'm happy that it's helping a lot of people. But please, you'll be wrong if you don't share this blessing with everybody that you know. Please ensure you share it with everyone you know, okay? So today we'll be dealing with something very, very special. Now, the banking industry. We're going to be doing a case study on the banking industry. Wow, hope you're as excited as I am, right? And the most recent time or the most recent diet where the banking industry was tested, the case on the banking industry was tested was November 2022. So we're analyzing that today. Although it's going to be a lot of information, but I'll try as much as possible to break it down so that you can understand because the aim of this YouTube channel basically is just to ensure you have all you need to succeed in your Ican examination. And I'm here to share all the tips that I also used that helped me pass all my Ican exams from ATS ones, professional ones, by the grace of God. So I'm going to be sharing all the tips here. So let's dive in. Yes. So this is just the cover page of the November 2022 diet, and we have like instructions. We don't really need that now. So let's go to where we need. So exhibit. So this is a case study on QD Microfinance Bank, and you are told about you, Ismaila, and your employer Hexalinks Consulting Associates. So you're working for Hexalinks Consulting Associates, and then you are giving overview of the microfinance sector of the banking industry, categories of microfinance banks, and she also giving information about Kudi Microfinance Bank. Then you were given extracts of financial statement, like extract of financial statement for 2020, including previous year figures. That's 2019 and 2020, and a circular of central bank. So basically, from this information, are we preparing an internal or external report? Brilliant! We're preparing an external report. Why? Exactly. There's the presence of a third party, right? And because now look at this, your employer is who? Hexalinks Consulting Associate. And you are doing the case study on who? Kudi Microfinance Bank. So you know that it's not your employer you are working for or you're preparing the report for, right? If you did not know that, that's not the problem. Don't say, how is I not? Don't worry about that. Just check my channel. You will find a video, and I've even in because of the classes I've done, I've always pointed out how to identify if it's an internal or external report. So if you have been following my channel or following my videos now up until this particular video, I'm sure you have an issue with that. But that's not a problem if you are new here. Just check my video on internal and external reports. So let's go on. So you're getting information about you. You were told, oh, you are writing a professional exam. You are employed as a training consultant and excellent consulting associate, and you are reporting to Dr. Munir Oyemilokan. I don't know how to pronounce that, but probably I got that right. And one of your clients is Kudi Microfinance Bank, a state microfinance bank. So Kudi Microfinance Bank is a state microfinance bank. Let's highlight that. And under the direct supervision of Financial Institutions Supervisions Department of Central Bank. And you were also told that their deposits are insured by NDIC. Then you're were also explicitly told your responsibilities that you are actually doing in your company. Moving on, you were given information about the overview of the banking industry, where you were told that a microfinance bank is a bank that provides services to low income earners or groups. So the microfinance bank focuses on low income earners or groups. That's basically their focus. Then we're also given information about the institutions of or banks participating in microfinance also provide lending in form of micro loans. So they're just telling you what the microfinance sector is about, what they do, and all of that. Like they basically focus on small or low income in any individuals, and they allow people to take reasonable loans safely in a manner that is consistent with lending practice. So they're just telling you all about it, basically all about it. Then let's just move on a bit. They were given information about the four categories of the microfinance banks, where you have the first one. The first one is the tier one unit microfinance bank. The tier one unit microfinance bank is a microfinance bank that has urban authorization. So basically, it works or it functions or operates in the urban sectors, the urban areas of the country or urban areas of where they operate. Basically, the urban areas, the highbrow areas. That is where the high density areas. That is where the tier one unit microfinance bank operates or is authorized to operate. The second category of microfinance bank we have is the tier two microfinance bank that is authorized to operate in rural areas, like rural areas, underbanked areas. That's where the tier two microfinance bank is authorized to operate. The next one we have the state microfinance bank, the state microfinance, and don't forget what we said here. You can see that here, right? That Kudi microfinance bank is a what? Is a state microfinance bank. So let's calm down and read it clearly, like carefully, because this is what we are concerned about. Because we're concerned about Kudi Microfinance Bank, right? So a state microfinance bank is authorized to operate in one state or the FCT. So Kudi Microfinance Bank only operates in one state or the FCT, right? In one state or the FCT, and it's allowed to open branches within the same state. Within the same state. So Kudi Microfinance Bank (KMB) can only open branches within its state. And if you read from here now, if you go back, let's go back a bit. Now, if you go back a bit, where they were telling us about Kudi Microfinance Bank, they told us that the head office is in Abeokuta, Ogun State. So that implies that Kudi Microfinance Bank can only open branches in Ogun State, only open branches in Ogun State, subject to the written approval of CBN, of course. It shall not be permitted to open more than two branches in the same local government area unless it is established as one of unless it has established at least one branch or cash center in every local government of the state. A newly licensed state microfinance bank shall not commence operations with more than 10 branches. So basically, this is just telling us that Kudi Microfinance Bank can only operate within Ogun State or the FCT, like either Ogun State or the FCT, and can only open branches within the same state. So if we're providing solutions or we're giving recommendations, we cannot be telling them, oh, Kudi Microfinance Bank, open a branch in Lagos or Abuja or Port Harcourt. No, we can't do that because according to the CBN guidelines on microfinance, state microfinance bank, a state microfinance bank can only open branches within the same state. So we have to take that into consideration. So and the national microfinance bank that can operate in more than one state, but basically the state microfinance bank is our concern because that's Kudi Microfinance Bank. And we also give information about Kudi Microfinance Bank that is a leading microfinance bank in Ogun State, and it was licensed in 1991 as a community bank. So it started off as a community bank, right? It started off as a community bank, but later on it became a unit microfinance bank under the CBN revised policy of 2005. And it was later upgraded to community microfinance bank in year 2020, partly after meeting the minimum capital requirements of a state microfinance bank. So that shows that it actually really became a state microfinance bank in 2020 in 2020. So the head office, they told us where the head office is, the vision and the mission statement, as well as their core values. Then here we give information about the products and services of Kudi Microfinance Bank. Like you can see, they have savings accounts and the features, the requirements to open a savings account, and all of that. So we give information about their products and their services. That's good. So moving on, we're also given information about the board of directors, where we're told that Dr. Benjamin Gemi is the chairman, Reverend Valentine Razak is a director, and they also gave us all other information about directors and management staff. And they didn't even stop there. They were so nice. They gave us information about the shareholding and the percentage of shares that each member of the board holds or held or is holding in that sense. Anyone. Anyone, right? The percentage they shall have, right? All right. So then we're given the statement of profit or loss or other comprehensive income. Now, looking at the statement of profit or loss or other comprehensive income, at a glance, what can you deduct or what can you depict or what can you really say about Kudi Microfinance Bank? Exactly. If you look at their profit or loss, you can see that in the year 2019, they actually made profit of 6,488,000. But in 2020, they made a huge whooping loss of 118,020,000 naira. And if you look at it now, if you look at it, and they actually made operating income. Oh. Look at it now, they made operating income. But when they got here, can you see what happened here? The expenses, the personnel and other expenses, wow, so substantial. So that's something to look at. That, oh, Kudi Microfinance Bank, they have to deal with these operating expenses because at that point it was the operating expenses that and the personal expenses that actually sucked up the entire profit, because at that point we started making a loss, a loss, and it was really significant that from a 6 million naira profit, we started making a loss of 118 million naira plus. That's substantial. So this shows that Kudi Microfinance Bank they actually have to look into this expense that they actually probably put in, adopt cost strategies, because this is a big problem, a very big problem. They also gave us the microfinance, the statement of changes in equity, and you can see that, oh, the retained earnings was actually very, and I can see that, oh, we had a share capital of 500 million plus, this one of 5 million, 3 million, but the retained earnings, so we're supposed to be having something like, oh, a total equity of at least 600,000 naira, because we're having share capital of 500 million plus. And we're having, so that means that the retained earnings, the or rather retained deficit now is a big problem. It's a very big problem because it's actually sucking up our equity. Do you understand? And we have seen that. I remember, recall from your corporate reporting, financial accounting, as the case may be, that the profit after tax is transferred to the retained earnings, right? Yes, the profit after tax is included in the retained earnings. So that this implies that the reason for the retained deficit basically is the profit or loss, or let's just say the loss that the company is making. The loss that the company is making is a big problem. So the company actually has to look into this, because this loss is actually draining their equity, because the loss has been included in the retained earnings, and the retained earnings is a part of equity. So obviously it's just a big problem. So that operating expense is the foundation of that problem. So you have to provide solution or pinpoint it out, at least, that they should be concerned about that retained earnings. Do you get? Now, if you look at this too, year 2022 did not go without a problem. Do you understand? We still had a problem as well. Do you get? We still had a problem. And that actually reduced our equity. Even though, look at this, we had a capital injection of 461 million for 20,000. That's huge. A capital injection of, do you understand? But irrespective, we still had a loss. We still had the loss that we had, that was added to the retained deficit that we had prior, actually reduced our our total equity, because now our total share capital was 1 billion naira. But eventually, because of the high retained earnings or retained deficits now, we had 525. Imagine having a share capital of 1 billion and eventually having a total equity of 525. That shows that that retained deficit is a big problem and has to be considered and dealt with urgently. And you know, the foundation of that problem is what? The operating expense. So now, I see that gradually, I've not started writing any reports, but from the analysis, from looking at the financial statements, we already have a lot to say about Kudi Microfinance Bank. But let's keep going. Now, you can look at the statement of financial position. That's, oh, the equity was 182 and this was 525. But now Kudi Microfinance Bank is now a state microfinance bank. So what is the minimum capital requirement? We don't know yet. They have not told us yet. But probably as we keep going, we will discover the minimum capital requirements, right? Because if they have a total equity of 525, that's actually a deep concern, but might not really be a concern if they're actually meeting the bar. But let's keep going as time goes on, as we keep looking at the information, we'll see the minimum capital requirements and we'll see if they are safe or not. Do you understand? So we have deposits from customers, we have other information that was given to us as well. As well. So let's keep going. Let's keep going. Then, okay, yeah, beautiful. They attached a circular on Small Microfinance Bank about the review of the minimum capital requirements. Good. So let's look at it now. So we have a state microfinance bank. That's what we're concerned about in all of this information. We're not concerned about the others. Now, a state microfinance bank has a minimum capital requirement of 1 billion naira. And let's go back. And we have 552 as at 2020 anyway. 552. So that's like, oh, we are way, way below, right? Like 400 million plus below the benchmark. So let's still see, probably in 2020, let's see if probably they will give us an additional 2021 financials. Let's see if they made it or something. So let's see. And we also told that the State Microfinance Bank shall increase its capital to 500 million by April 30, 2021. So by April 30, 2021. So they must have increased by April 30, 2021 and 1 billion by 2022. So let's see, probably by 2021, maybe they actually had 500 because after 2020, they actually had 525. So if they could maintain this as a 2021, that's good. But if they could not, that's a big problem. That's a very, very big problem. So that was all about the pristine. So let's go to the unseen now. So the unseen, we're given list of exhibits and information about it. So let's go to the first exhibit that we're given in the pristine. So this was information about from Dr. Munir Oye Milokon, the person that you're reporting to in your company. So he told us that there are significant issues arising from the above clients, Kudi Microfinance Bank, right? And let's received an email from the managing director of Kudi Microfinance Bank Limited. The bank is requesting our professional advice on how to overcome some of their present challenges, particularly as relating to the meeting of the minimum capital requirements by the regulatory authority, CBN, and other related financial issues that the bank is dealing with. So you can see that we actually saw that this is a problem, and then they're even giving us, they're telling us information that they need our professional advice to overcome these issues. But yes, let's still see that 2021. But if they didn't give us information about that 2021 financial statements in the pre-scene, but let's still see if they give us in the unseen. But as at the pre-scene, they were told that as at 2021, they should have at least 500 million, and 2022, they should have 1 billion. So let's still see. So we have to give them recommendations on that. And the first thing we know that they should reconsider their operating expense. So I've not even done any report, but we know that operating expense, we must talk about it because it's affecting their equity through return deficit. So they told us to comment on it. So let's look at our requirements now. Your report should comprise of an analysis of the financial performance of the bank. So the first thing they want us to do is carry out a financial statement analysis, right? This is just basically financial statement analysis. So we're going to carry it out, talk about the financial soundness, earnings capacity, profitability, prudential indicators. So we'll do all that. And second one they ask us to do is to evaluate the options available to the bank for recapitalization purposes, like the options that the bank has, the options that are available to the bank for recapitalization purpose. Yes, and this evaluation should also cover operational and strategic issues related to the options available. So that means they're going to give us options for recapitalization because they really urgently need capital to meet the bar. Because even though 2021 they were able to meet the bar, they still have to maintain the bar because as at 2022 they must have 1 billion. So it cannot be a case of oh, we moved up to 1 billion, we moved down to 2 billion. Okay, that's I'll move up to we moved up to 1 billion, we moved down to 800 million. No, it has to be stable or increase the minimum. That's why it's called a minimum capital requirement. So the minimum is not as if obviously they have 5 billion. That's good, that's awesome. But we have to also analyze the options available, right? So we're also given information from the MD of KMB. That's the MD. The MD also sent us information. He told us that you can recall, we had discussions on capitalization of our bank and other reporting issues. Our bank is currently experiencing downtown despite recent capitalization by directors and current shareholders. You can recall that there was a share injection rather, a share injection of I think 461 million or thereabout. So despite that, they're still experiencing issues. Why? Their return deficit is the problem. So they're telling us now that the directors are desperately looking for ways to meet the minimum capital requirements in order to avoid sanctions. So that's like their desperate measures, like they are very, very desperate now. So we have to actually help them a lot. So they want us to, so you can see they said that, so they have given us information about the last 3 years. So as to advise on the way forward to address the problem. We already have our draft financial statement of 2019 and 2020. I therefore forward them with the audited financial statements and domestic reports for 2021. I knew they were going to give us 2021 because from the way they were just talking about 2021, 2021, we actually needed these financial statements. We actually need it. Do you understand? It's of great importance to us now because we actually need to analyze what happened in 2021. And they also told us that they received a letter from CBN that there will be no deadline extension. Like there's no way to extend the deadline. So that made by April 2022, that 1 billion naira must be complete. It must not be 999 million. It must be complete. So there's no deadline. And if they don't follow, there'll be a lot of sanctions. And peradventure, worst case scenario, they may actually lose their license. So they need urgent help. So in addition, the management of the bank has received two proposals that were presented in next board meeting in addition to external auditors' requests on draft financial statements. However, you're able to go a long way in deciding. So you should evaluate the proposals, tell them the pros, the cons, and all of that that they want to know in the proposal. So we're going to be doing that as well. And tell us to carry out the financial data analysis, obviously. Obviously, know that anytime we're looking at something relating to proposal, projects, contracts, we know it's a financial data analysis, obviously. So that was that information from the MD. And also, they also told us the letter of non-compliance that CBN also sent to them, letter of non-compliance, and stating that the above requirements we review the adjusted capital position of your bank as at December 31, 2021, right? So the deadline of is April 30, 2021. That's the deadline. So they must meet the deadline of April 30, 2022, rather 2022. April 30, 2022. They must meet the deadline of April 30, 2022. They must actually meet that deadline. So they must ensure that by April 30, 2022, that 1 billion naira is complete. That 1 billion naira is complete. So that's that about that. Then we also given information. This was the from the a management letter from the auditors, rather from the auditors, right? The management letter from the auditors. So we're giving information about that. Then they told us that there was a great observation. They said that we observed that the bank is yet to adopt IFRS 9. So the bank has not adopted IFRS 9. That shows that probably we have to do some recomputation because we have to probably include IFRS 9 because if the auditors are asking for IFRS 9, you get that means we have to also pinpoint this, like talk about it that the company is not yet has not adopted IFRS 9 is a big problem. The failure to adopt IFRS 9 has carried out, so you understand. So that's just basically the other thing was the impact of IFRS 9 that has not carried out. Failure to adopt IFRS 9 finds that the bank has not carried out necessary evaluations on the impairment of risk assets. You understand? That means all those expected credit losses. Wow, that means the financial statement that they're going to give us as at 2021 has not included. So they're just trying to tell us here that oh, when you are considering the financial statement of 2021, you have to consider the the impairment of loans, the expected credit losses. Don't worry, I'll be explaining all that in details. Just calm down, I'm with you, okay? So we're going to be doing all that in our 2021 financial statement. And they also told us that minimum share capital has not yet been met. And look at what they said. They said, despite the fact that you are yet to make provisions for loan losses according to IFRS, now your bank's shareholders fund unimpaired losses is yet to meet the. I know that unimpaired losses would further reduce our profit or even now we don't have profit, we won't have loss anyway. The unimpaired losses will further add to our loss, add to our problem. And then I know that an increase in loss would obviously increase retained deficit. And retained deficit is part of the total equity, so it's going to reduce our equity further. So we have a big problem here. We have not even we are already have experiencing a problem, but we have not even considered the thing that this comes. We're going to have to do a lot of analysis. But don't worry, that's why I'm here for you. Okay, we're going to do that. You don't have to worry. So there's also the implication that it may lead to withdrawing, can you see, withdrawing of your license. So they actually have to consider it. So this was just the auditors just talking to them and telling them all about it. And this was the draft financial statement that was given. And it's draft. That means they've not yet audited its draft financial statement. They're just auditing it. They're just working on it. So that's something that you also have to consider. The draft financial statement that you actually have to consider. Now let's look at it. In 2021, they actually have profits, but that's something that we should actually run to. Oh my god. Unfortunately, it was a loss again. A loss again. Well, this is a big problem. And if it's a loss again, if there was no capital injection, then most likely we'll have profit lower. In fact, that 425 million that we had before, we're still trying to manage it to see how we can increase. We're still having a loss again. And what caused the loss? Again, this personnel expenses, this expense. It's a problem. That shows that they're not actually learning their lesson. They're still not considering this thing properly. This personal expense is a big problem. But let's still go. Let's still see. Probably there was capital injection. That's the only saving grace. Oh my god, there was no capital injection. Ah, nothing. Capital injection column is blank, totally blank. So that's like wow. So definitely our equity is going to reduce further, and we're even going to start from a let's just look at our total equity. Let's go there. So our total equity, can you see, from 525 million 600,000 reduced further to 327 million. So this is like wow, where do we start from? We're thinking at 500, oh, before you know, we're already at 1 billion, but now we have something even lower, and which is a big, big problem, a very, very big problem. So we need urgent help, urgent help. So let's go on. So further, they gave us information about the no earlier the auditors made mention that IFRS 9 has not yet been considered. So they gave us a reconciliation of impairments based on IAS 39 and IFRS 9. They gave us something like that, you get. So based on IAS 39 and IFRS 9. So this is like the financial impact. So as at as at December 31, 2020, the impairment according to IAS 39 was 43 million. But now we have an impairment impact because of IFRS 9 of 116 million. And now, sure, I'm going to explain this when we're doing the calculation, but briefly, now IAS 39 is the previous standard on financial instruments, but IFRS 9 is the new standard of financial instruments, and IAS 39 considers incurred losses. IFRS 9 considers expected credit losses. Now, what does that mean? In summary, IAS 39 considers losses that has already been incurred. Do you get losses that has already been incurred? While IFRS 9 now considers losses that are going to be incurred. Just like now, for instance, now if you have oh you are supposed to incur, you're supposed to pay rent of this year. You understand? So IAS 39, IAS 39 only considers incurred losses. Oh, the rent of this year that you're supposed to pay. But IFRS 9, oh my god, IFRS 9 considers both losses that you have incurred now, that's the rent of this year, and the losses that you will incur in future periods. So most times, so in fact, all the time, the loss of IFRS 9 will be more the loss that IFRS 9 will consider will be more than that of IS 39. Because if IS 39 is only considering rent of this year, let's say your rent is 200,000 per year, IS 9 will record 200,000 loss. Do you understand? But IFRS 9 will be recording probably 200,000 for 200,000 for this year, 200,000 of next year, 400,000 loss. So using IFRS 9, most times your profits will reduce because your impairments obviously will be your payment loss will be affect will be an outflow your statement of profit or loss abi right yes so if you are using IAS 39 probably if you had a gross profit or operating income now or let's just say if you had a let's say gross profit let's just use a simple term if you had gross profit of 100,000 and then you are having rent of 10,000 naira right so that would be gross profit of 90,000 but using IFRS 9 if you had gross profit of 100,000 probably be having an impairment of maybe 20,000 so instead of 90,000 that you will have had as net profit in using IAS 39 you'll be having 80,000 as as net profit using IFRS 9 so IFRS 9 the the impairment loss is usually more because it considers expected credit losses. So we're going to be doing other calculation in when we're doing the practical class, but this one to just let that out there. So the impact that we're having is 116,357,000 naira. So and also gave us information about the the performing and non-performing loans. What are performing loans? Performing loans basically are loans that the the borrowers are not defaulting, they're actually performing, they're actually paying their loans up to date, like as I went due. But non-performing loans are loans that the borrowers are defaulting, they're not paying. That's that's like the debt, the problem, the wahala loans. That's the thing. Performing loans are the good loans, the good ones are paying as I went due. While non-performing loans are the wahala people that don't pay as I went due. So they gave us information about performing and non-performing loans as well. We're going to be using that too. And also gave us information about other known losses. Other known losses. So this is like the losses that has been incurred. So I'm going to be doing that in our practical class. Then we're given information about the the recapitalization, right? So those are they have options, capitalization options. So the first one is from Olowolagba family, the Obi Olowolagba family. You get, so that's the first one, Olowolagba family. So that they gave us information about it and all of that. We're going to be looking at that in our practical class in total. And they also gave us second proposal from Networth Microfinance Bank as well. So I'm going to be looking at both of them closely. So that's just basically all about this. So we're going to be in our next class, we're going to be looking at the practical aspects of it. So I'm going to be explaining more to you. I'm going to also be showing you a full report of how of and from the beginning, from the cover page to the executive summary, to the body of the report, to the appendices, everything I'm going to be showing you in our next class. So till I see you then, and till we meet again in our next class. Bye. Have a lovely day, and I wish you success in your exam. Please, if you have not liked this video, please like it. And have not subscribed, please do well to subscribe before you log off. Thank you so much. Have a lovely day. Bye.